Welcome to a new update, and today we're going to discuss everything surrounding the price action of Bitcoin once again. Yesterday we've had a speech from Powell, which ultimately didn't really change the perspectives of the markets at this point, and it opens up the perspectives of the continuation of this run, so we can have some more upwards momentum. Altcoins are finally moving alongside Bitcoin, which is different than the run we've had in 2019. And ultimately, that's giving you a ton of opportunities to trade. However, right now people are chasing the AI coins, Fetch, Ocean. They have all been going up quite substantially. And there are still a ton of opportunities in the markets of coins that have not been getting the run at all. And I think you should be chasing those. Tomorrow we are going to discuss that. But today we're going to focus on Bitcoin. And before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also, check out our free trade letter. Today, we're discussing macroeconomics once again. You can subscribe to the trade letter beneath in the description, and also final 3 days of the 30% lifetime discount. You can start following my copy trading, or you can copy trade my portfolio. Next week, we most likely launch a second portfolio, and we've got a ton more content happening in the platform. 30% lifetime discount as we have made 35% profit in January. You can find it in the description beneath. Now, what we are looking at right now with the markets is the fact that we are having the entire view change of the policy of the Fed. So, last year, we've had the insane amount of hikes taking place. Interest rates have been going up through the roof. And through that, we can see that in the chart as well, Bitcoin has been starting to rally as the potential policy shift is taking place, in which we can actually see that Bitcoin starts to run, Nasdaq starts to run, the yields are dropping while there are still hikes taking place. The dollar has been bouncing, but not really giving that much of an impact at this stage anymore. And most likely we continue making that run as people have been swapping their sentiment quite fast. So if we are looking at the chart in the previous period around October, November, and December, ultimately what you've heard is that the markets are most likely going to fall further. And based on that perspective, and also with the entire amount of negativity happening in the markets, it resulted into a case where the market started to fall, or people were actually running out of the markets, taking their loss and just moving on. So that's what have been taking place here. Then second, in this entire run, people have been continuing to short the markets and try to short the markets as they didn't believe this actually this run was taking place, in a sense that it's only pushing the markets even further. So what are we at? We are currently at 23.2k, and yes, ultimately, if we have a correction taking place towards the area of 21.4k or 21k, or maybe even a CME gap at 19.7, I think it will be a very short-lived correction. It will be a fast one, especially if we drop beneath these lows. It's going to be a fast one as we take out all the liquidity there and just bounce back in. Why is that? First of all, people are eager to jump in. So when we get there, I think that bounce will be quite fast. But ultimately, I think that we are not going to get there right now as these policy change from the Fed has been taking into account right now. So as I discussed earlier in December, the policy rate hikes or the policy from the Fed with the rate hikes reducing the inflation has come to an end. So maybe we're going to have one more hike, probably not, but it will sustain at this level for now, which gives us a window of 2 to 4 months to enjoy the actual run that's taking place, which I prefer to call a fake relief rally. So the markets are booming back up again. Nasdaq is running, Bitcoin is running, gold has been doing well, but people forget about the policy. That's what's probably going to take place in these 4 months. People forget about the policy from the Fed. They think that the markets are done and that there is a soft landing. And then at the later stage of this year, the recession starts to kick in. So at some point, he has to reduce the rate hikes, or he has to reduce the rates. And the ultimate reason for that is that the economy is just suffering. And I think that if you adjust those rates so fast, the impact will take approximately 9 to 12 months before you can see it in the real estate markets and in other markets. So use this window for yourself, and that's why you can see this run. And therefore, that's why I'm expecting that the markets are not continuing to have that correction. So I'm not saying we won't, but if we get in this region, I think that it's a great moment to start stepping into the markets overall. If people have been buying into Bitcoin in this entire period, I don't believe that they will start taking profits here. I think that the take profit part will start to take place around 29 and most likely 37 to 40k. I think that this entire run, and now we have got a sideways period which can just last for a few weeks before you can start running again. This run towards 37 to 40k is most likely going to take place in Q2, maybe Q3 beginning, but most likely Q2, and then we're done. And then we have another very fast correction taking place before the entire bull cycle starts to take off. So what we're looking for right now when it comes to Bitcoin, I think that if you don't have a position, you had a period of 8 months in which we were just going sideways in this range. So if you don't have anything as a position right now in terms of investments, which is different than trading, I think you just should slowly start DCAing still, because I'm not too sure. If we go to 40k, probably we have a very fast black swan type of event dropping towards 18k again, and then we continue the rally. But if we get towards 35 to 40k, these prices are still the prices that give you the ultimate chance until the coming 10 years. I don't believe that we'll stay at these ranges for the next years, despite the fact that bears also still have their arguments, of course. But this is just looking like a solid sideways action, fake out taking place here. Corrections are getting bought up quite fast as people are eager to get into the market, so that's fine. Now, when we're looking at the lower time frames for Bitcoin, we have got a few crucial levels, and I think we could be cracking this already when this video is live. But 23.2 is the ultimate one. If that breaks, we take out all the liquidations here. We start to rally towards new highs. If we lose 22.6, most likely we have a correction towards 21.5 to 21.7, which is ultimately for me the buy range. If I was looking for longs, that is the range that I'll be looking at. If we break 23.2, I think we start to rally even more and altcoins will just follow along. Right now I think it's just DCA period for Bitcoin. And if we look at the altcoins, I think the ultimate lesson that I would like to give to you is to not focus on the ones that have been running already. Focus on the ones that are not running yet, because there are a ton out there that still are eager to have that run. And if they have been running, the more it goes vertical, the shorter the window should be that you're trading the actual asset, which means that if the run has been substantial, you can still trade it, but just do it for intraday or scalp trades and not for swing trades anymore, because most of you use it as a swing trade and then get wrecked. All right. I hope you have been enjoying this update. Make sure to subscribe to this YouTube channel. I'll see you again tomorrow. Ciao.